Hello viewers, welcome to my channel, Sensor 360 Investor, where we leverage best practices from business world around the globe, apply them to the investing process. Investing has many facets. Here we incorporate a 360 view framework across all of them to create, grow, manage wealth. In this video, we are going to focus on markets, and the video is going to cover specifically the S&P 500 treasuries. I've also added sentiment in addition to the earnings that I did previously. Before we begin, quick word on the disclaimer. Remember that this is not financial advice. Please pause the video and read through this. It will be shown again before the close. So without much further ado, let's begin the show. So here is the long-term view of the S&P 500, and in the short term, not a lot has changed. So we're still tracking overall in this long uptrend, but we've obviously had a severe pullback correction that's been underway. We've had a couple of support zones, so we're kind of still at a critical area where the market's trying to decide which direction it wants to take. Is that enough? And we start to move back up, or is there more downside? That we will only know for sure looking back, but certainly the macro picture and everything else that's going on does suggest that there is more downside yet to come. And then I've got these markers here in blue. That's where I think we will probably begin looking at stabilization. And if we do get a recession next year, then I've got this green shaded area below that. So the market could hit any of these levels, and we shall see what happens. Zooming into a daily chart, same view, but this is a daily chart. So we can see how where the markets tried to establish support at this level, just below the 3,700 in the S&P, and it's now started to form a pattern where it could be, it could go several ways. It could just fail at resistance at this level and then come down, or it could, this could be it, and we start cutting through the resistances to the upside, or we fail at resistance and we come back down. Last week I said that the target's between 38 to 3,900, and look where we stopped. We stopped right at 39.01, so pretty good estimation. And with the momentum in the markets this week, we certainly could see a look at 4,100. So there still could be some upside, but there's also a lot of resistance starting to come in, and the market's made quite a significant move in the last 10 to 12 days. So bear that in mind too. If we look at the hourly chart, then we see a nice little move. And in fact, on the hourly chart, you're starting to see a nice kind of bottoming pattern forming. And we're also starting to see a nice trend, higher highs, higher lows, higher highs, higher lows. Looks like a higher high. So we're suddenly starting to put in a trend. So the 4,100 is not out of reach. And then staying with the dailies, but with the candlestick chart, in terms of looking at what's happening with the breadth in a way. So if we look at the last 25 days and 2 days, we can see that there were 7 days in the last 25 had notable selling, 2 in the last 5 days had notable selling. On the upside, we had 3 notable days of buying to the upside in 25 days and only 1 in the last 5 days. And then if I look at the up days and the down days on heavier volume, there were 6 days to the upside, 7 days to the downside. So this has been improving, this is strengthening, and this is also strengthening. So the overall, from a breadth perspective, the market has improved. And I introduced these two last week on the, this is the 10-year treasury yield. But I had indicated last week it was kind of looking somewhat climactic, and wouldn't be surprised if we get a pullback. That's exactly what we got. And then the 10-year treasury bond fund over here, TLT, and I also mentioned that this was looking like capitulation last week, and we certainly got that resolved into the upside. Resistance here, support there. So we'll see. I wouldn't be surprised if the yields start to move back up, and then the market will come down as a result of it. So we look at the 12 trading months just from a fundamental pictures. The 10-year treasuries are for S&P trailing earnings yields as 4.93. That's dropped a little bit, and then GDP on an annual basis is around 1.8%. So although the S&P looks slightly undervalued, it's not enough to want to take on the risk at this stage. So we have to wait and see what happens there. And then I also introduced the prior week. So the main thing I pointed out last week is, so as the yields went up, which is this green line, the S&P stopped going down and actually had started to stabilize. So we had this little divergence start to occur. And even though, and then as the yields did come down, Treasury did move up. So that's kind of an interesting set of events that have unfolded. And the blue line that's hidden in here is actually the dollar. So the dollar and the yields have been tracking, and certainly the dollar came in last week as well. Okay, so a couple of sentiment indicators I included this week. So this is the put call ratio, and we can see on the put call ratio, we've never hit levels, this showing in May through to October in the last 5-6 months. We haven't hit levels where we can really call a bottom. It's just not enough put buying. We came close here in September, the week of the 19th, so 24th, whatever that is. So there's not a lot of indication there. And then if we look at the fear index itself, the VIX, again, we haven't seen enough fear in the markets to say we're done with selling. So the buying is continuing, and so without a major sell-off, blood in the streets, as Rothschild would say, like capitulation selling, I'm not sure without that flush we can really feel comfortable that the bottom is in versus a bottom has been put in. Okay, so here's a new chart from AAI.com, and they've been doing a member survey for decades now. So I thought this was interesting to share. So over here we have the last 4 weeks worth of survey results, and this is the historical view based on the historical averages. And then we have the 1-year bullish high point, the neutral high point, and the 1-year bearish high point. So you can see over the past year, the bears were almost 61% at its peak. As of last week, that's come down to 45.7, which means the bulls have been stepping up basically, and there's less bearishness out there. Again, that goes back to the VIX and the put call ratio, so that all correlates. And then AAI introduced this not too long ago, more like a speedometer. And so it kind of, when it's down here, it says, be greedy, like you should be stepping in and buying, and over here is fearful, market's topping or whatever. So we're right on the kind of the border of the greedy gauge and the kind of neutral gauge. And we can see what it's been over different time frames. Last week was at -34. So definitely the market's had some buying coming in. So people have been stepping into the market. And then if we look at earnings, so if you look back at last week's report, you'll see how the predictions fared. And I think for the most part, they did a good job at calling it. And so this week I've got 3 on the long side, 3 on the short side. So the ones that are likely to beat ZoomInfo, Airbnb, Fortinet, and the ones that are likely to miss, so Universal Display, Pergo, Bosch Health. So there's strategies that traders can use to play ahead of earnings for the most part, not recommended for newbies, new beginners, or if you're not confident, or if you don't really have a solid performance track record at this stage. But certainly for the more experienced ones, this might be useful information for you. Okay, so in this video, we looked at markets and I gave you an update. The disclaimers on this page as well, so please do read this disclaimer. I'll give you a few seconds to look down it, and then I'll close out with final thoughts. Okay, so that wraps it up for this video. Still, markets are still not firmly to the upside, but trying to make an attempt. Thank you for watching and listening. I'll see you in the next video. Until then, goodbye.